Did you know that celebrity investor has been pilfering Tesla shares during the decline, and that Cathie Wood believes that the company is a buy at this time? You definitely wouldn't want to miss this information. While some people are growing concerned about the performance of EV stocks in the market, the majority of experts and investors think that now is the ideal time to get Tesla shares. This year, the technology sector has been among the worst performing in the stock market, which is a sharp contrast to its phenomenal gains in 2020 and 2021, not to mention its tremendous tech entrepreneur Cathie Wood, who leads ARK Investment Management and its flagship venture, has managed to dodge the carnage. This year, the ARK Innovation ETF has lost 57% of its value. The ARK Innovation ETF has more than doubled since its inception in 2014, despite the fact that it has seen sharp losses this year. ARK is recognized for investing in innovative companies with long-term time horizons. That emphasizes how crucial it is to disregard any short-term market fluctuations and concentrate on the larger picture. Currently holding electric powerhouse Tesla are 3 of ARK's 7 ETFs, and those bets may be about to pay out hugely after hitting a 52-week low of 206.86 in May. ARK predicts that Tesla's stock could rise to 1533.33 by 2026. Although the stock has already recovered to around $270, there is still significant upside potential for those who purchase now and adopt a long-term perspective, solidifying Justice's reputation as a top investor. When the stock fell, Woods Trading was quick to buy back shares and sell some when it rose higher. In fact, in mid-October, Woods added 66,190 Tesla shares to the more than 132, double zero she had purchased earlier in the month. When Tesla released its Q3 earnings in early November, the stock fell and Cathie Woods of ARK Invest loaded up on Tesla shares in its innovation, next-generation internet, and autonomous technology and robots ETFs. The company's 3 funds saw a buying opportunity in the automaker's recent decline on Wall Street. ARK's Innovation ETF bought 2,594 shares in the second week of November, while the next-gen internet and autonomous tech and robots ETFs gained 2,909 shares and 9,173 shares, respectively. Their first purchase in October came after Tesla reported missing deliveries. In addition to being the world's biggest manufacturer of electric cars, Tesla is now the only lucrative pure-play EV stock available to us investors. A fleet of fully autonomous robo-taxis that won't require any human intervention is scheduled to be released by Tesla in 2024. The company's competitors are either established automakers carrying on with their legacy combustion engine vehicle business or their new, up-and-coming EV hopefuls who haven't scaled production yet. Additionally, Tesla has developed some of the most cutting-edge autonomous self-driving software, which could be the future for both personal vehicles and the mobility industry. According to one estimate, the market opportunity for autonomous vehicles will reach $2.1 trillion by 2030. Outside of the automotive sector since 2012, Tesla has installed 4 gigawatts of solar systems, generating 25 terawatt-hours of clean energy, more energy than every Tesla vehicle. And every Tesla production facility combined, and the company has used a new facility specifically to produce these batteries to ensure adequate supply. According to Tesla's 2021 impact report, the company is continuing to expand its presence in residential solar and battery storage, and demand for these batteries is growing quickly. Tesla's legacy is more than just an electric vehicle manufacturer. It is a true green energy enterprise. In 2012, Tesla produced barely 3,100 electric automobiles. By 2021, that number had skyrocketed to 30,422, generating $53.8 billion in sales. With the recent opening of 2 new gigafactories in Austin and Berlin, the business is continuing to increase output in an effort to double its yearly manufacturing capability to 2 million analysts of automobiles are placing bets that once such facilities have ramped up, Tesla may potentially produce $119 billion in revenue annually as early as 2023, be the center of Tesla's operations for many years to come, particularly in light of the company's recent ambitions to build 10 to 12 additional gigafactories with a combined yearly capacity of 20 million cars by 2030. Although ARK predicts that by the target date, Tesla's robot taxi business will account for 60% of the company's value, electric vehicles will still generate the majority of the company's revenue based on its modeling of the $1,533.33 price. Although the target may seem lofty, it's important to keep in mind since going public in 2010, Tesla's stock has increased by more than 21,400%. Despite being the largest player in the industry, Tesla is known for providing investors with high-flying returns over the past few years. However, in 2022, the stock faced several challenges that led to a 52% decline in its value year to date, with some of that decline occurring in the past month, despite the NASDAQ 100 Technology Index increasing 6.25% throughout the previous 30 days, although investors seem concerned about CEO Elon Musk's focus following his recent $44 billion acquisition of social media giant Twitter, which seems to be taking up much of his attention. Many believe that this shouldn't change Tesla's long-term trajectory, and many Wall Street analysts remain extremely bullish on the company. In fact, an analyst for ARK Investment Management believes that Tesla stock could soar nearly 930% by 2026. Tesla stock has dropped roughly 14% during this period. In the last 4 quarters, Tesla has manufactured 1.2 million cars, generating $74.8 billion in revenue overall. This provides some perspective for ARK's forecast that the stock of Tesla will soar by more than 900% by 2026. The company has 4 full years until the end of 2026 to meet ARK's initial price projection, but even then, that projection may be a little ambitious. ARK estimates that the company will need to sell 17 million cars annually with revenue of approximately $1 trillion. It is important to note, however, that the initial report by ARK does not account for Tesla's stock split because it predates its occurrence. Elon Musk, the CEO of Tesla, has hinted that the company may reach 20 million vehicles annually, but that won't happen until 2030, as additional 10 to 12 gigafactories will be needed, since none of these have been formally announced yet. It's unlikely that the company will be so far ahead of schedule that 2026 becomes a realistic possibility. Having said that, ARK has a bear scenario at the lower end of its forecast, which calls for the EV manufacturer to sell 10 million vehicles by 2026, generating roughly $490 billion in revenue. In other words, it would mark the halfway point of Elon Musk's 2030 project, and the timing does make sense. If that scenario materializes, ARK believes that Tesla could rise to $966 per share, representing more than a 400% upside. As such, it would still represent a significant gain from here and is far more likely than the extremely bullish scenario. Volatility has historically accompanied Tesla stock since the start of the Twitter saga. Most of his tweets have promoted fresh ID concepts for his newest. Venture capitalists are dubious because Musk has effectively damaged the Tesla story stock, and this ongoing Twitter train wreck catastrophe may be beginning to affect the Tesla brand. Perhaps some of the most cutting lines from Ives' note were that Musk smashed Tesla shares by performing what we perceive to be a really unpleasant and terrible situation, something that bears have been trying to achieve for years without success. Permables from Tesla are still attached to the company's premise. ARK is still positive about Tesla. Wood predicts a tenfold increase in Tesla shares in an email update to investors. Wood said that by halving the price of an electric vehicle, Tesla could increase its addressable market by 10 times. Wood also noted that numerous innovations in the auto business have put the traditional auto sector, and by extension traditional automakers, at a competitive disadvantage. Wood used Tesla's autonomous taxi platform in harm's way as an illustration of this innovative stage of development. With Tesla already leading the industry and growing to be the biggest automaker in the world, things are unlikely to change anytime soon. The company's future is bright. As the EV industry as a whole and Tesla itself enter a new phase, the firm has positioned itself to lead the way forward. Even though future results may differ from past ones, given all of Tesla's pending issues, it is prudent to carefully consider if this is a wise moment to make investments in general. Being a strong supporter of innovation, Cathie Wood is still quite optimistic about Tesla stock. She consistently expresses her enthusiasm for Tesla and its next innovative projects. Join this channel to receive information on Tesla stock.